Welcome back. So Nifty continues to be where it was, 375 points lower on the Nifty. So 25,423 is the mark that we are looking at the day's low. Mid caps too are doing the same thing. They are down around 730 points. If we talk about the broader markets, though, there are a couple of movers on the upside. Jubilant Ingrevia, we spoke about that stock a while back. That stock has surged to levels of 830. That's 7% uptick that we are seeing on Jubilant Ingrevia right now. Parag Milk Foods is up around 6%. We have Petronet LNG. There's an MK upgrade that has come by on the stock. They've upgraded the stock to a buy, increased the target price by 14%. They like the demand that the company has been seeing from other sectors, barring power sectors. Utilization is something that they like as well. So those are a couple of stocks that are on our radar. But it's a good time to discuss market fundamentals. Devang Mehta from Spark Private Wealth Management is joining us now to discuss just that. Devang, good morning. Thank you so much for joining in. And what a day to have this conversation, right? So much happened in the last 48 hours. We're talking about a lot of geopolitical tensions. We are talking about kick-starting Q2 earnings season as well. How are you looking at the markets currently? More downside from these levels?
Good morning, Sonal. Thanks for having me on the show. Absolutely, yes, we are seeing a bit of volatility coming into the proceedings. But honestly, if you look at the market complexion over the last 1 year, to be precise, and I keep on repeating this, last September to this September, and now it's the start of October, every now and then market has sort of started to show some bit of turbulence. And the turbulence is roughly around 3 to 5%. And at this levels of the market, when we had a fast, furious, and an extremely spectacular rally across the market caps, if I can say, be it large cap, be it mid cap, and be it even small caps, I think this should be taken with a bit of a open heart. And I think these corrections are what makes a market a little more healthier. It has to be a continual rally rather than a continuous rally. So my sense is that, yes, there is geopolitical tensions which have come to the fore. There is crude price which has risen because of that. I think also what we have seen is even the global markets and Indian markets have climbed all the wall of worries. Be it the Indian elections, or be it the budget, or be it the first quarter earnings, even the US rate decisions were sort of taken with a positive heart. So I think next 2 months, you will see a lot of events. I think I was listening to events being lined up right from RBI policy to the earnings season to even the US elections next month. So I think, yes, it's a heavy calendar for global markets and Indian markets. We might see a bit of turbulence. But again, as I said, this has been the complexion of the market to be buy on dips, and a lot of people were sitting on the sidelines. A bit of FOMO should sort of, yeah.
Devang, just hold on. Apologies for that interruption, but we have still with us. Devang, particularly talk about the auto ancillary space, and have you had a look at Sona Comstar, and if you could share your views on the stock?
I think, no, I've not looked at Sona Comstar to be precise, but on the overall space, if I can talk about the auto components / auto ancillary, and even the OEMs for that matter, I think the space looks extremely interesting after a long time. I know most of the companies have rallied, be it right from Maruti to M&M, and also a lot of auto components and auto ancillary stocks have rallied. But I think getting into the festive season, the demand for the bikes, demand for even the CVs, all of these are sort of rising. So the sense one gets here is that most of these companies are going to do extremely well in the coming times. Also, I think precisely there are companies like wiring, now company which gets into the groove. When one upgrades a car from a normal car to a normal hybrid to an electric vehicle, I think there's a lot more 10x, 15x wiring more required. So I think this type of themes will play out over the longer term. So most of these companies, as I said, auto ancillaries, autos, we take as a part of discretionary consumption in our portfolios.
Okay, so that is about auto space. One space that has been defying the trend that we are seeing with markets is definitely metals. Today it's been volatile, of course, but how are you looking at that space, considering whatever is happening in China? Do you think this could be a fundamental or strategic move or structural move from here on in the metal space?
I think, yes, of course, mostly we have seen metals always go through that cyclicality, but this time it's I'll not say it's different, but most of these companies have a lot of tailwinds. Companies have sort of reduced their debt. Most of these companies are now working more efficiently than they were, and I think the demand cycle as well has turned. So how we play this, one is to play via pure play metal stocks, but I think the better and the more efficient way and to generate a little more wealth is to play it via companies which are proxy plays towards it. So just giving an example, not a recommendation, there's a company called Tega Industries, which is more into copper and gold mining equipments, and that is consuming So such type of companies with a market cap of roughly around 13,000 crore, ROE of around 17.5%, ROC of around 19-20%, and a huge dominant market share in this industry. Revenues and profitability growing in excess of 15-20%. I think these are type of proxy plays which one can evolve, one can buy in their portfolios for the longer term, and these are plays which will help you to ride the metal wave as such.
Okay, Devang, we'll leave the conversation here for now. Thank you very much for joining in. We'll come back and continue talking about the auto space. On the other side, we have C.S. Vigneshwara from FADA and Mumuksh Mandalesha from Anand Rathi Institutional Equities.